The market is almost fully priced in for a hold. That means rates unchanged, and in theory, for the time being, that would put an end to this aggressive hiking cycle that we've seen from the European Central Bank. Now, we should also note, because the context this week obviously matters, this is a decision that comes after we got those PMIs. Again, this is a European economy that cannot catch a break. We also had that lending survey, and then, of course, the geopolitics. This is a central bank that cannot escape the geopolitics, and the head of the ECB already alluded to some of those risks pegged to the war between Israel and Hamas. Now, you put all of this together, you could argue there is today a convincing case to hold. But the question, and this was really the focus point going into that press conference, is how do they want to frame it? What is the narrative? Will she say this is a hold in a very particular context, not putting a number on the peak rate? Remember, she's not been willing to say we're there yet. Or actually, will she switch to say there are structural reasons to hold, and therefore that means monetary policy is working and you switch fully to higher for longer? The one conversation they do not want to precipitate is cuts. And just finally, Danny, the other point is, obviously, if they hold, this is a central bank that has to do a balancing act, and that means you focus on the balance sheet. Remember, the PEP investments, they run all the way until the end to 2024. Well, she signaled today they are now willing to make changes to that structure. So all of this obviously shaping up to this monetary policy decision we're expecting from the head of the ECB today.